Good morning. My name is Jeremy Martin. I'm CEO of Horizonte Minerals, and it's a pleasure to be here and present at the BMO conference. By way of introduction, Horizonte is a dual-listed company. We're listed on the AIM in London and the main TSX in Canada. We are focused in Brazil. We've been active in Brazil now for nearly 10 years, and we have 100% ownership of two Tier 1 nickel assets, the Araguaia Ferronickel project and the Vermelho nickel cobalt project. Both of these assets are what we term Tier 1. What do we mean by that? Low cost, high grade, long mine life. We can supply not only nickel in the form of ferronickel to the stainless steel market, and also sulfate to the EV battery market. Both projects are in a mining district with very well-developed infrastructure. We've got strong ESG credentials and a clearly defined pathway to scalable production. This slide shows our journey from grassroots discovery. We actually made the original discovery of Araguaia back in 2010-11. We were then able to acquire the adjacent discovery, Greenfields discovery made by Teck. And then in 2016, we were able to acquire the northern part of the district from Glencore. So those three deposits today make up Araguaia. And then in 2016, nickel prices were trading at historic lows. And we said, look, this is an opportune time to potentially look at acquiring a second asset that could be mine number 2. And we were able to acquire the Vermelho nickel cobalt project from Vale. So over the last 7 to 8 years, through a combination of drilling, discovery drilling, drill out and acquisition, we've grown our resource base by around 800%. And these resources today are the fundamental building blocks for the business. On slide 5, this is where this story becomes very interesting. Up here, we're up in the northeastern state of Pará. This is the Carajás mining region, shown here with the white ellipse. This is where Vale have all of their large iron ore operations, their copper operations. This really is a world-class mining district. Vermelho is located right in the heart of that district. You can see there in the red symbol. Araguaia is located about 180 kilometers south, and then Araguaia North is the Glencore deposits that we acquired in the center. And within these three centers, we've got just under 400 million tons of global resource. And by building mine number 1, line 1, line 2 at Araguaia, and then mine number 2 at Vermelho, we have the resource base to build out 50 to 60,000 tons of annual nickel production. And that would be at a similar level to Anglo American today. So this is a very significant resource platform for growth. As I outlined earlier, because we're in a mining region, we've got very good infrastructure. All of the power in this region is hydroelectric, which plays well into our CO2 per ton of product. And also we've got road, rail, port facilities, all of which lower the cost of developing the assets. As I've said, we've got significant experience in Brazil. All of the boards have either lived or worked in Brazil. Our team is based in the head office in Belo Horizonte, and we've got a local office at the project in Conceição. I spend a significant portion of my time in Brazil. And you can see there just some of our stats. As I say, over 65% of the workforce is local. And also we've targeted really building out our team in the Pará state. There's a lot of very skilled people based out of Carajás. And as a result of that, we really feel that this is going to be anchored in the Pará state, and all of these skills required to develop and build and operate both of these assets are available to us. If we look at the nickel market, it's had a very interesting 12 months. If we were talking a year ago, February last year, nickel prices were at sort of $12,000, $13,000 a ton. We saw a significant drop off along with all of the other commodities as the COVID pandemic unfolded. And then as we moved through Q3 into Q4 and Q1 this year, we've seen a significant tightening of the market, and obviously nickel prices have increased significantly, and we're trading at around sort of $19,500 a ton today. And that's really been driven by significant demand out of China in the stainless steel sector. Now, over the last 18 to 24 months, we've seen significant focus in the global investment community for nickel. It's principally been around nickel in EV batteries, and that seems to be the real focus of attention. But what we mustn't forget today is that 70% of all nickel produced is utilized in the stainless steel sector. So around 70% of nickel is used in stainless steel today. Battery demand is around 5 to 6%. And even when you move forwards 20 years to 2040, stainless steel is still the dominant demand driver. And you can see that in that lower pie chart. The light blue is stainless steel. Obviously, we know EV battery growth is going to be an exponential demand driver, but what we mustn't forget is stainless is still going to be the midterm driver of nickel. If we look at this slide, this is really showing the effect of the EV battery market on the nickel demand supply side. If we look at 2021, we're seeing a broadly balanced market today. You can see their existing supply in light gray. And then the dark blue line really just shows EV battery consumption moving over time. And if you look out to 2030, at the low end of the demand picture, there's around 230,000 tons of new nickel required. And by 2040, that has widened to 1.5 million tons. And that's on a 2.4 million ton total production today. So it's a very significant increase is required in that picture. And the other factor is because nickel has traded at historic lows for the last 10 years, there's been very limited capital has flowed into the next generation of nickel projects. So you've got all the drivers you want in a commodity space. You've got stainless steel as the driver today, running at 4 to 5% year on year. You've got the massive new EV battery market really evolving, which is a significant catalyst as we move mid to long term. And then you've got those supply side issues in terms of bringing new projects online. So all of that plays very well into where we sit today, having a tier one development stage nickel asset to come online at the right point in the cycle. And that takes us through to Araguaia. It's a nickel laterite. It's a fairly traditional design of projects. We're using a 60-year-old process called rotary kiln electric furnace. There are over 40 operations using this technology around the world. And what this means is it's de-risked, it's been financed multiple times, and it is a low-risk processing technology that we're adopting here. You produce a product called ferronickel. It's a high grade. We're going to be producing 28 to 30% nickel in product, which is at the higher end range of the production scenario. And this will go straight into the stainless steel market. The other key factor is with this process, you don't have any tailings. The waste byproduct is a granular silica slag. And actually in Brazil, that's classed as a resource, and it can be used in concrete as an aggregate, also as a binder in asphalt. So we'll see downstream uses for that process. It's all shallow mining. Maximum pit depth will be 25 meters. And as I opened with, we've got a very significant resource at Araguaia, and we've always wanted to ensure that the plant and operation that we build is scalable. So we've designed the process plant as a stage 1, stage 2, and you can see here on the slide the initial design for the plant. It's a very compact plant site. And the area in blue will be then sterilized to put a second process line in. So line 1 will produce around 14,500 tons of nickel a year, and then that will double with the addition of line 2. But the key factor is all of the upfront infrastructure, the power, the water, the site services are all covered in the upfront CapEx. And if we look at the feasibility study economics, you can see there in the left-hand column, stage 1, we've used a consensus nickel price of 16,400. As I say today, nickel prices are over 19,000. Upfront CapEx is $440 million. And over the 28-year mine life, after payback of capital, we generate $2.4 billion of free cash flow, rapid payback, and the key factor is low C1 cash cost. We're going to be sub $6,800 a ton, which is directly competitive with Indonesia, which is currently the global price point for nickel. So this is a very cost competitive asset we have here. And then we talked about that second line. We've modeled that coming in, starting construction in year 3, coming online in year 4.5. It's an incremental $250 million, financed through cash flow, and that adds a further $1 billion over the 28-year mine life. Now, if this was being built by a major mining company, they would build both lines on day one, and you would have a sort of a 38 to 40% IRR. But we feel this is a much lower risk strategy, building line 1, ramping it up, and then bringing line 2 on post ramp up. This just shows the cash flow of that first line of line 1. Years 1 to 4, you're averaging about $140 million of free cash flow a year. That's because we're treating material that's over 2% nickel through the process plant. Again, this will be one of the highest grade next generation nickel projects. And then if you bring the second line in year sort of 4, 4.5, 5, that adds a further $1 billion over that period. So highly cash generative. We are fully construction ready. We've spent the last 8 months going through a phase of value engineering. So all of our capital costs are as of December 2020. We've got a high level of engineering. We're over 35% engineering definition on the project. We're in the final stages of selection and award of contracts for long lead items. Likewise, the EPCM will be selected in the next month. We've built out our owners team, and we've got a very detailed project execution plan. So this is literally subject to closing project financing, ready to start construction on. We're well advanced on the construction financing. We were able to mandate that syndicate of 5 international banks, Mizuho, ING, Natixis, BNP, and SocGen. They have provided a senior secured term sheet of $325 million of debt. We are well advanced on the offtake. We aim to have the offtake negotiated and closed by the end of March. And we were also able to secure a cornerstone investor in December for broadly $100 million, and that underpins that key equity piece. 2 weeks ago, we additionally closed a $25 million institutional fundraise, and all of these pieces will be finalized as we move through Q1 into mid Q2, and then the final piece will be a public market offering to close off the financing package. We then move on to our second asset, which is the Melio nickel cobalt project. This was being developed by Vale. Vale spent just under $300 million on this project. They gave it the go-ahead in 2005 to build a $1.3 billion, 42,000 ton a year nickel cobalt HPAL plant. The only reason this wasn't built is later in 2005, Vale bid $17 billion for Inco, which was Canada's largest nickel mining company at the time. They successfully acquired Inco, and within the Inco portfolio, there was basically a carbon copy project of Melio called Goro. Goro was already under construction. Vale continued with the build out and ramp up of Goro, and as a result, Melio sat on the pipeline and was never built. We were able to acquire 100% of the asset, all of the feasibility study data. We knew that we couldn't bring a plus $1 billion HPAL project to market. So we looked at the project data. We actually redesigned the project as a smaller throughput operation, lower CapEx. And you can see here we released a pre-feasibility study, upfront CapEx of $650 million. And again, using that consensus nickel price of 16,400. It generates a fairly significant cash return here of over $7 billion over the 30-year mine life, lower quartile. This really is a very high quality asset. It's one of the highest grade undeveloped nickel cobalt laterite projects out there. And you can see here, this is a grade tonnage curve just showing contained nickel against a number of its listed peer groups. And it really adds to the testament of Melio. Whichever asset you want to benchmark it against globally, whether it's grade, contained metal, it really can outperform the majority of its peer group. And you've got to remember, this was going to be Vale's flagship nickel cobalt mine. There's been a significant focus on ESG in the mining space in the last 2 years. It's really been built into everything we've done over the last 7 to 8 years since discovery. Both of our assets can offer very compelling ESG credentials. Obviously, we talked about hydroelectric power, which means low CO2 per ton of product, shallow mining, and in Araguaia, we're shipping a very refined product from site. So we are comfortable that both of these assets can offer low CO2 per ton of product, and we're seeing a significant focus on that from downstream clients. Another key part of this journey is with our communities. Although we are close to Carajás, the economic drivers as you move further south towards Araguaia do drop off fairly quickly. Our local town of Conceição do Araguaia has got 45,000 people. It's 35 kilometers from where the mine site will be. But the average wage in the rural communities around Conceição is about $2.50 to $3 a day. Araguaia, even on the single line, will generate around $600 to $700 million of taxes and direct employment over the 28-year mine life. So it's going to be a major economic and social driver for multiple generations for this part of the state. So as a result of that, we've got very good government and community support for developing the asset. So it really is, it's a very exciting time for Horizonte. We're moving from being an explorer developer into a next generation nickel producer. Our timeline is focused on closing the project financing mid-year for Araguaia. We start construction in H2 this year. We aim to produce first nickel in late 23, early 24. We're also going to permit that second line so we can double capacity 20 to 28,000 tons. And we will also be fast tracking Vermelho through to feasibility study. So we have a number of catalysts coming in terms of market activity. And the key thing about the business is we have the ability to supply both sides of the nickel market. There are very few development-ready tier one nickel assets globally. Araguaia is going to produce ferronickel to the stainless steel market, and then Vermelho comes online to produce intermediate or sulfate for the EV battery market. And on top of that, we've got that significant resource base over time to build out a 50 to 60,000 ton a year nickel business. And there are very few of these integrated opportunities about. We have a number of key shareholders. We have Teck Resources and Glencore as significant shareholders, alongside a number of London and North American institutions. So we have some exciting milestones to lay down over the next 6, 12, 18 to 24 months. We believe this is going to be alongside a favorable nickel market with the ability to create some significant shareholder value. Thank you very much for listening.